Limited. What did they say the company is? They said the company is a trading company. That's already implied on how we are going to treat their capital allowance. And this is like a full question, and that is like a really, really comprehensive question. And that's the reason why I want us to like deal with it. So the first requirement is that we compute the capital allowance claimable by the company for all the relevant years of assessment. So in doing this, do not forget, again, I have mentioned to us before, when you want to answer, and Delco James, please, can you unmute yourself and let me know you're in this class? Because I'm going to take it like all the way back because of you. I'm going to take it really slow. Delco James, can you unmute and let me know that you're in this class? Delco James, are you there with us?
Okay, sir. Is
Ah,
Elizabeth?
Elizabeth,
Yes, sir.
you are Delco James today.
Yes, sir. Good
Oh,
evening,
you're
sir.
welcome. Good
Thank
evening.
you,
Were
sir.
you in class last week?
I came late.
Oh, okay. Please pay attention
That
in this
was the
class.
time that you gave me the penalty that I should be the one to read.
Oh, okay. That's true. All right.
Yes, sir.
You're welcome. Please just let's all pay
Thank you,
attention,
sir.
please. You're welcome. All right. So I shall shift. The first requirement is what? Computation. Computation of what? Capital allowance for all relevant years of assessment. Okay. So what did I say that we normally do when we want to compute capital allowances? What do we do first? There is something that we must do. Someone should please unmute and let me know. What do we do first?
Fixed asset schedule.
Okay. Your fixed asset what allocation schedule or your asset allocation schedule. So that we can be able to know, they have given us the dates, the acquisition date. They said the company acquired the following qualifying capital expenditures in so dates. So they have given us the date of acquisitions of this asset, but we have to like know what year of assessment they fall into. We might not be able to like easily just look at them like this and just assume and just like be able to like know that okay, this is when they fell into. We have to actually like prepare an allocation schedule so that we can know when, in what period, in what basis period, or in what year of assessment to slot them in when we are computing our capital allowance. So when we are doing our allocation schedule, we have like how many columns? We have three columns. We have the tax year, we have the tax year, we have the basis period, and we have the words, the qualifying capital expenditure column. I'm going to shift this well so I can have enough space for the three of them. All right. So I can still reduce this one. This is just taxi. For the first one, let me look at. They give us the date that they commenced business. They said they commenced business in 1st April 2023, right? Right. And when is their year end? They give us their year end as 30th of September. You can see period to year ended. So it means that the first tax year will be from 1st of April 2023 to 30th of September 2023. So what will be the year of assessment like that, the tax year like that? Oh yeah, someone should admit and tell me what will be the year of assessment like that? 2024. Are we on the same page, please?
Yes.
So for this 2024, it will be from the date of commencement to the end of the first accounting year end. So it will be 1 4 1st of April 2023 to 39/23. All right. 2025 will be 1st of April. No, not 1st of April now. What will it be now? Oh yeah, someone should meet and let me know. 1st of when? Oh, yeah, 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 yeah. Now, let us waste time. Oh,
1st of October
thank you.
2013.
23, 2023.
First of
Yes.
October.
Yeah, to 39. Oh, 24. Sorry, it's 24, not 23. Oh. So 39, 24. The next one will
Ah,
be, who's saying that? One,
sir, how is it 24?
this is 2025 year of assessment or year or tax year.
October 2023 to 30th September 2024.
That that
Oh,
second year
sorry,
is not correct.
2025 assessment.
sorry. Thank you so much. Thank you. Pardon me, please. That shows that you're actually following me. So there, thank you. So, right, right. So this one should have been 22, Abby. I think it is the question that actually confused me. There's an issue with the question. Okay, there's no issue with the question. The question is correct, Abby.
It's correct. That first one is fine.
Okay, that first one is fine. Thank you. 2027 is 1, then 25. So 39, 26. Okay, let's see. Is there any other one that, okay, they gave us 2027. Okay, let's do this for 2028, which will not be the final one. Because we have the profits for 30th of September 2027. So to be 110.27 for 26 to 39.26. Okay, are we fine with this? All right. Let me put this onto email. All right, this is fine. Okay, so let us look at it well. We have all of these periods now. So let us look at the period of let's look at the date of acquisition and then slow them in. The industrial buildings, which was the first one, was acquired 1st of February 2023. 1st of February, have they started business then? No, they have not started business. So remember, we recollect that we say that any asset that is acquired before the date of commencement will be treated as though they were acquired on the first day of what of business. Am I correct? So it means that this one will come here, industrial buildings. Am I correct? Please, nobody is responding. All right.
Yes.
The second one was acquired, plant and machinery was acquired on 1st of April 2023, which was on the exact day of commencement. So it will also be here. Plants and machinery. There are two plant and machinery. Plant and machinery one be here. Um, Furniture and fittings, which is the third one, was acquired 4th of July 2024. 4th of July 2024 will be when? That will be here now, in between this place now, because this is 30th of September 2024. So it will be here. Furnitures and fittings. Am I correct, please? So please be checking what I'm doing. Though. The second plant and machinery was acquired 7th of July 2025. So where will it be? Let's look at the basis period. What you're looking at is basis period. 7th of July will have been in between this place. Plant and machinery too. Right. The fifth one, which is the final one, is 10th of July 2025. When would that be? That will also be in the same month or the same year with this plant and machinery. Do we all agree with me, please? Or have I confused anyone? Do we all agree with me?
Yes.
Okay. Another thing that we're going to have, if you check the question, they said the industrial building was sold on 4th of August 2025 for 18 million naira. So another thing that we're going to have in this question is when we have to figure out, we have to include that in our allocation schedule is the when it was sold, when there was a sale. So when was the sale? Industrial building disposal, 4th of August. When is 4th of August in this same year? All right, we have to put it here. Industrial building sale or disposal. Disposal. Is that okay? Please confirm by me that that is okay. We do not have anything here. We do not have anything here. Is that right? So for our computation now, so we can go straight into the computation of our capital allowance. For our QC, for our computation now, we have QC and we have the rates. For the rate, we have the initial allowance in percentage. We have the annual allowance in percentage. And then we have the what? Investment and allowance. But in this case, will investment allowance be applicable? No, it will not. We haven't said that we do not want to like take cognizance to it because of. But no, forget what I said last week. When you, if you are in your exam, you are not. You are, of course, you are not including it, but you have to put a note there that because of the Finance Act 2022 amendment to investment allowance, that is the reason why you have not included it in your workings. All right. Please let me know that I'm communicating. Do we have people on this class in this class, please?
Yes, you are communicating.
All right, thank you so much. I really need that. So I will not just think I'm talking to myself. All right, so for our QC, what is that? What is the first QC that we have here? Industrial buildings. We have industrial buildings, then we have plant and machinery. Then we have motor vehicles. Then we have, personally, for this not to be confusing, I'll do this twice. Plant and machinery one. Then we have furnitures and fittings. Then we have plant and machinery two. I could have done both plant and machineries together, but I mean, it's just way confusing for what where have I put furniture and fittings then? And where did I put motor vehicle here? Not a machinery one. Sorry. Plant and machinery one, then furniture and fittings, plant and machinery two, then motor vehicle, yeah. Right. Okay, so what is the please give me the rate for these guys. For industrial building, what is it? I believe that is 1510, right? Please confirm for me. 1510. For machinery, what is it?
50-25.
2025. Thank you. For furniture and fittings, 25
25.
20. For plant and machinery,
50-25.
25. Motor vehicle,
50-25.
and we have total allowance, right? So for this to be easy for us, I think. Can reduce this. Okay. You're no longer copying. You're not copying. You're no longer copying this, Abby, because I've reduced it. Oh, I've collapsed it. Let's put this as industrial building like this. I'm gonna make all of this middle so that it can be well presented, and then I'm going to reduce the zeros. All right, this is fine. Okay, let's go. All right. So I don't like this way. The way this gonna stay. Yeah, please let's continue. I think I understand the reason why it's not working. So the first one is the first year is what when the first one is when 2024, right? Tax year is 2024. Let me just put it here. Tax year. Or YOA slash BP. Year of assessment times slash basis period. So the first year of assessment is when 2020 what 4. And what is the basis period? Since I already have the allocation schedule, so I don't need to rewrite the basis period, but I can also equally do that. But there's no point rewriting it actually. It's just a waste of time. So what is the first thing that we have? Industrial buildings, right? So we have costs. What's the basis period? Let me just put it out here. 1 4 23 to sorry, let me just do it here. 1 4 23 to 30 September 23. All right. So what will be the cost for this guy? What's the cost for industrial building? We have industrial building in that first year and plant and machinery in that first year. What is our cost? 12 million 760,000. Am I correct? Am I correct, please? And also, how am I putting it here? Oh, okay. Then what about plant and machinery? You know what? Let me put this thing in. Let me put it in. Please mute yourself if you are not talking. Please mute yourself if you are not talking. Mute yourself if you are not talking, please. Thank you. So for this, our initial allowance will be what? We have another item for that particular year now. This plant and machinery, what is it? 4990,000, right? Okay. So for these two additions that we have in the year, what is our initial allowance? They are new items, so I have to complete initial allowance for them. Initial allowance for this one is 15%. So please, someone should compute 15% of 12,760 for me. 12,760 rather. Oh yeah, oh yeah, oh yeah.
1,800,114 naira.
Okay, 1,000,000. Right, this right, 114 naira, right? Then this one,
Two
is that correct,
million
right?
four nine thousand.
All right, thank you so much. Then we have to compute the initial allowance, the annual allowance rather. Now don't forget the annual allowance. You have to prorate. Why do you have to prorate? You have to prorate for the number of months that it was used in that year. For these ones now, it is a little bit dicey because they were the first one. Industrial building was acquired before the beginning of the year, and so we assume that it was acquired in at the commencement rather, before the commencement. So we assume that it was acquired at the commencement of the business, right? While the second one was acquired on the same day of commencement of business, right? But we have to now ask ourselves: the government tax year or year of assessment is 12 months. This particular period, or these are particular assets, although they were acquired at the beginning of the company's commencement of business, but were they used for 12 months? Someone should please answer that question. Were they used for 12 months? Oh, yeah, we are now. Answer the question now. Were they used for 12 months? Nobody's answering. Were they used for 12 months?
Oh,
No. So, how many months were they used for? We have to count April, May, June, July, August, September for 6 months. So, we have to prorate for that 6 months. And do not forget the formula for proration. And you have to like actually disclose, you have to disclose your formula in your exam. Oh. You have to have a page for workings. You can see the way we did this. We did for this. That's the same way you would do in your exam also. So we said our annual allowance is what cost minus initial allowance divided by number of useful life times y over 12. We said y is number of months in the year when that this asset used. All right, in that year. So for this one now, the asset has used 6 months out of 12 months calendar year. All right, so we have to prorate. So how do we go about this? We'll say the cost. What is the cost? 12,760,000 minus, right? So yeah, someone should compute it for us. I don't want to write it out, but in your this thing, you have to like write it out.
510,000
Okay,
and 30
510,000.
and 32.3.
What is the useful life first? The useful life is 10, right? 10 years, right? Times 6 divided by 12. Okay. What did I do? Let me do this again. This minus this in brackets divided by 10 years times 6 divided by 12. Okay. Is this what you got? 510,032.3 Abby?
Yes, yes.
Okay, thank you. So this one will also be because this one we already took out 50%. So I don't have to be deducting. Let me just say this will also be remaining 50%, right? I'll just say for this one, I'll just say divided by what is useful life for this one? 4, right? Times 6 divided by 12. I hope
I
you are
got
paying
an
attention. All right. So Compute the total allowance here for me. Total allowance will be 1.8114 plus 2.495000, right? I'll just do this. I will sum everything up. I will also do the same for this, right? So if I do this, I get my total allowance for that year. So this is my total allowance for 2024. Is this okay? Are we clear with this? Okay. If there's any question, please just ask me. I'll just put this in bold. If there's any question, please ask.
140,000.
What do you say? What did you say, please? What did you say? Come make. I can't hear you very well. Who is talking? Abiodun, right?
No,
What is no? Why are you not talking? You are
I
saying
was
no. I
logged
said,
out. I quickly log in back now.
so you have not been following. So who was
No,
talking before?
I've been following you.
Who was so someone was saying something? All right, let's just continue. Okay. So for the second year, do we have any additions for the second year based on our allocation schedule? We have one. It means we are also going to have costs in this second year. So for the second year, we will have 2025 as our year of assessment. Then in brackets, we'll have our basis period, which will be 110, all right, 2023 to 39, 2024. All right. So first of all, we are going to deal with the costs, okay, which is our cost is for the new one, or we can put cost slash tax written down value. So the cost is for the new one that we are introducing for the year, while the tax written down value is for the ones that we are carrying down. Please, is that clear? For the cost now, for the cost, what's the cost of the first furniture and fittings? 2.4 million. 2.4 million. Let me expand this so that I can bring out the values very well. 2.4 million. Communicating, please. So we have to compute what the tax down value of this one is. What is our tax down value to be? This minus this minus this. All right. The same thing with this as well. Am I communicating, please? All right. I believe I am. So we are going to have initial allowance. Elizabeth, are we going to have initial allowance for industrial building and plant and machinery? Elizabeth, please unmute and answer the question. Are we going to have initial allowance for industrial building and plant and machinery? Is Elizabeth still in this class? You please, when I ask question that your network will be bad. The other time when I was just talking randomly, her network was good then. Oh, she's even now she's logged out. Oh. Okun Victor, Loveth, you have not said anything in this class. Are you also on the road? Osana, can you
Good
unmute and
evening.
answer? You're not on the road. Okay. Love it. Perfect. Love it. Are we going to have initial allowance for this industrial building and plant and machinery?
I'm sorry, I'm still trying to follow up.
Ah,
I'm sorry.
Yes, sir, we have.
we will have for industrial building and plant and machinery. Why are we going to have initial allowance? Osana, you answer. Continue. Don't mute
You say,
yourself. Oh.
sir, yes, you say why?
Yeah, why?
You say
Where are we going to have a
Initial allowance for industrial building and plant and machinery. Yeah, explain to Lovett the reason why we're going to see have initial industrial building and plant and machinery.
because initial allowance is usually given at the beginning of, how do I put it? Oh,
Continue. It's always given at the beginning of the it's always given at the beginning of the year,
at
at the
the
first
beginning
year.
of the business year, the first year is the first year of
Not
business.
not the first year of business. So it is the first time. It is in the first year of use of the assets. That was why I said though. That is when initial allowance, and it is one off. So it
Yes,
means
and
that
it is one of.
once the asset has enjoyed the initial allowance once, it cannot enjoy it in the following year. So I'm still surprised at the reason why you said it's on the industrial building and plant and machinery will still enjoy initial allowance.
No, I didn't say it will still enjoy.
Okay. I thought you said it will still enjoy.
No, what I said was that it is given at the beginning of the business year.
Okay. So the fact that this is the second year for industrial building and plant and machinery, they have already enjoyed initial allowance in 2024, which was their first year of use. All right. And regardless of the fact that the asset they only used the asset for 6 months in that particular year. Recall that we said that initial allowance is not prorated. You can see that when we're computing for Lovett, please pay attention very well. Okay. Recall that we said that initial allowance is not always prorated, even if it's just 1 month that the asset used in that year, right? It will still enjoy the full initial allowance. However, annual allowance is only calculated for the months that the asset used during the year. I hope that is clear. So you can see that when we're computing for 2024 now, we computed initial allowance in full. We just said 15% times the cost with no prorate. When we're computing for annual allowance, we said cost minus initial allowance divided by the number of useful life times 6 over 12. Times the 6 over 12 means we are prorating for the 6 months that it was used during the year. I hope that is clear. Then in 2025, the only asset that will enjoy initial allowance is furniture and fittings because that is the first year of use. If you check our allocation schedule, what we have done up, you see that that is the first year of use. I hope that is clear. So let us compute our initial allowance for this furniture and fittings. So this one, we have zero initial allowance here, zero initial allowance here. This one will then have what? What is the initial allowance rate? 25%. So that's 0.25. We have 600,000. I hope that is clear. But now all of them would enjoy annual allowance because annual allowance is annual. So for us to compute the annual allowance for each of them, this one, it would have been the annual allowance, but don't forget here we already prorated. But in this year, the asset has now used, it has now used the full, it has used the 12 months, it has used the full year. But let us pay attention to something, please. Okay, this is still the next year. Don't forget that we have a disposal here. So it's still until the next year. So we can still go ahead. All right. So for us to be able to compute this annual allowance, we are computing annual allowance for full year, for the full year. Yeah. So we are going to say share allowance. Okay, let me just put it in bracket because I'm using Excel. Cost minus initial allowance times or divided by rather number of useful life. So that will be our yearly annual allowance. Now, don't forget the reason why we prorated this year is because in the first year, so it only used 6 months, but in the second year, now it has used the entire year. So we are going to do the same thing for this one, and that is what we have. All right. No, this is not correct. Oh, this is not correct because the year is not 10 years; it is 4 years for this one. All right. Now, for this, now we have to check when was it acquired and how many months did he use during the year for us to be able to calculate the annual allowance properly. When was he acquired? It was acquired when? Yeah, now someone should talk to me, please. Volunteers are 15th. What was acquired 4th of July 2024. So we can assume that that is the beginning of July, right? 2024. So from July 2024 to September 2024, how many months is that? July 2024 to September 2024, how many months is that?
Sir,
Three
I have a
months.
question.
All right, please ask your question.
Please, the kind of question in this
I can't be.
in this assessment year, it is full year, 12 months. So they don't prorate. They did not
For
prorate again. It
they
was
did
the
not.
first 6 months. That's the only time that they prorated.
Okay, but
Yes,
how
that
many
was what
months?
on WhatsApp.
Okay, that was what you were asking me on WhatsApp, right?
Yes,
So
yes. The
let's
solution that they did prorate the second year because it is 12 full months. But because the
12.
first one was, that's why they prorated. So they did not
uh,
prorate again.
so it did not prorate for the number of months that the asset was used during the
Yes,
year.
they have
Okay,
12 months.
so someone should do 2.4 minus 600. I was actually checking what you sent to me too. Actually, someone should do 2.4 minus 600 divided by 5.
That's 360,000.
360,000. Okay, I think that is actually accurate. That's actually accurate. So it is for the first. So in the first year that the year was the month um was not up to 12 years, 12 months rather. That is when we prorate. Is that what you're trying to see, right?
Yes, yes.
That's actually very accurate. Thank you so much for that. That's actually very accurate. So for this, we'll just have to like do this minus this divided by. So I've already. So that your question is answered now. Abiodun, right?
Yes, yes.
2.4 minus 600 divided by what? 5, right? The number of useful life is 5. 60, that's accurate. Thank you for that again. But I will have made the mistake again. All right. So that's 360,000. Therefore, that is all for that particular year, right? So let us compute our our initial allowance, our total allowance rather. Our total allowance here is this. Our total allowance here is this. Then our we have to get our total allowance for the entire year, which is the summation of all our initial allowance and all of our annual allowance. We have this. Any other question, please?
Yeah. Yes,
Any
sir.
other?
Sorry.
All right.
Yeah, based on what Abiodun just said now.
Yeah.
Yeah, I remember last week I was asking to prorate based on the number of the basic period, the number of months in the basic period, or the number of the useful life of the asset. We are saying the number of the useful life of the asset. Then my question is actually the question we saw last week. If we are going by what Abiodun just said, now it means that part of that question was not actually correct then.
Okay. Let's see the solution. Let's see the solution together. So did we prorate for any other period in that year? Because
Yes,
I've
sir.
not actually gone back to check. So if we
Yes, we did.
actually, oh, okay. So actually, that won't
Mm,
be accurate then.
Yes, sir.
So normally it is for the first year when we have like abnormal basis that we're supposed to prorate for, and the final year maybe there's a cessation, and then the number of months is also not equal to 12 months. All right, that is when we'll prorate for. Maybe I would have noticed it again. That's one of the things I said I was going to like check because I said we are going to like answer all of the questions that you have in this class. So that is actually wrong. Okay, thank you so much for bringing us back to that. All right. So we're not supposed to prorate for the other year when we have 12 months. It's only in the case where we have abnormal basis and it is less than 12 month that we prorate. Thank you so much for bringing me back to that. So let's continue. Is that all of your question? Is that all of the question, Victor?
Yes, sir. Yes, sir.
Okay, right. Let's continue, please. So this is all for for this year, right? So I think we about asked the same question. I'm not sure. I think we about asked some similar question during the week as well. We about a year. Now I said I was going to like address it.
Yes, I'm here, but my network is
I think you also asked
it
this
has been
a similar
gone.
question during the week
I didn't
about
really,
the
yeah,
number.
I had some questions, but I really not following this well because of my network.
What is wrong with your network? Me, but it looks like you have to get maybe under alternative network because I
Well,
noticed you have been.
I'm having up to three network here.
Are you
Just
serious?
joining and yeah, just joining and
Is it the
it's
network provider or the?
it's location, it's location. Let's just go because it's always 15 days somewhere in and out. So that's why.
All right, but
So no
have you
problem.
been getting? Please, have you been getting the recordings of these classes?
The recording.
Yeah,
Mm, no, I'm not I
I
haven't.
will, I will, I will talk to the. Let me even call the administrator now, so I won't forget again because you guys should be getting the recordings, so you can always go back. Let me call you now, please. I noticed that's not been we have not been sharing it on the group page, and that is. Hello, sir. Hello, sir. Good evening, sir. Yes, sir. Trust you are doing well today, sir. Okay, so I think the lectures are being uploaded on YouTube. So I'm going to share the link with you guys so that you can go back and rewatch. So it is different for you because you were in the class live. You get what I'm trying to say? You were in the class live, and so you'll be able to like relate better. Is that clear? Is
Yes,
that
sir.
clear? Okay, so
Yes, sir.
let's continue. So we don't waste much time. Okay, so I think we have sorted that. So you do not prorate based on the. How come we made that mistake, please? Where did that information even come from? How come we made that mistake? Okay, so you don't prorate based on the number of don't prorate based on when the asset was actually acquired in the year, but based on the basis number of months in the basis period for that particular year. I hope everybody has gotten it now. So let us make the mistake again in our exams, for instance. All right, so we're going to 2026 now. 2026, we have to be very careful because we have like a disposal in 2026. All right, in 2026, we have a disposal, so we have to take a particular asset out. All right, we have to take a particular asset out of the book. All right, so yeah, what's our basis period? Our basis period is 1, 10, 23, so 30 September 24. What am I writing? This one is 24, so 30 September 25. Thank you. Yeah, are we still going to have a cost? We have a cost because we have a new item being introduced, right? Am I correct? Plant and machinery and motor vehicles are being introduced in that particular year. We have cost, taxing down value. Is that clear? Is that clear, please? So
Yes,
for
sir.
this, for industrial building, what do we have? We have taxing down value, which would be this minus this, right? It will be the same thing for this because it's also the second year. But here we have to remove this minus this minus this. Okay. And we now have a new plant and machinery, which will now be costs. What is the cost of the new plant and machinery? It's 10 million naira, right? I have to expand this a little bit. Okay, thank you. And the motor vehicle also came in that year, which is 5 million. I also have to expand that a little bit. Thank you. So initial allowance, the only asset that we have initial allowance for that particular year will be the new plant and machinery and the motor vehicles. So industrial buildings, no. This one, no. Furniture and fittings, no. That is the second year. Then plant and machinery, that's 50% of the cost, right? That's the rate. So it's just the 5 million. So that's okay, sorry, pardon that. That'll be times 0.5. Okay. The same thing with this one because this one is also 0.5. Am I correct, please? That's accurate, right? So
Yes,
for
sir.
our annual allowance, so where this is where it gets dicey. Let's pay attention, please. This is where it gets dicey, dicey. For this particular asset, it was disposed during the year. The implication is that they are not going to they are not going to compute any allowance for it for that year. Rather, we are going to take out the tax down. We are going to take out the tax down value for that year. So the where disposal is different from an asset being fully depreciated is that when the asset is fully when the asset has reached the final year, what we do is we retain 10 naira so that the asset does not just go out of the book until it is eventually sold. But when it is disposed, we take the entire remain. We'll take even if it's just that 10 naira that remains and we sell it, we'll take that 10 naira out. Even if it does not reach the final year, the remaining tax written down value, we take it out. Is that clear, please?
Yes, sir.
Okay. So this one will also now have annual allowance. Okay. Then this one, compute the annual allowance. The annual allowance will still be equal to this. Because this is not a prorated, this is the full amount, right? And since it has used the full month, the full year in this period, we have to also for this one, this will also be the annual allowance. And yeah, the annual allowance will be 5 million times 25%. So this will be. So I hope you are following me the way I'm using this formula. So no, in your case, it is this thing you're gonna use. No, you see, people are right. Is it same guys that are using, are doing it online? You use calculator you're going to use. Though. Please, if there's any at any point where you do not understand my calculation, please just call me back. Please and please. Is that okay, please?
Yes, sir.
Here we have disposal because there was disposal during the year. We have disposal, and disposal means that we are taking this one out. So we are going to have this in brackets. We are taking everything out. 670,549.10. All right. So we have this one. There's no disposal for this one, this one, this one, this one. Let us calculate our allowances, please. So for this, we have this allowance. For this, we have this allowance. So what you can do is that In this case of disposal, all right, you have to compute the balancing charge or the balancing allowance separately. For you not to get confused, finish, please pay attention to what I'm trying to say. In a case where there's a disposal, where there is a disposal during the year, during any of the years, finish the computation of your capital allowances first so that you do not mix them up. Finish that first, all right, before you compute your balancing charge or your balancing allowance. Don't try to module it with your computation of your balance charge or or of your capital allowance rather. Don't try to module up the computation of your balance charge or balance allowance with the computation of your capital allowance. Please confirm that you understand that. Confirm to me that you understand that, please.
Confirm.
Confirmed. Okay. So for this, we already computed the total initial allowance and total no allowance. So all we have to do now is compute the.
Excuse me, sir.
Go ahead.
The industrial building, we're
All right.
supposed to remove the actual allowance for 10 years, isn't it, sir? For the industrial building.
No. So what we are going to do first of all is we are going to remove the disposal, the tax written the remaining value, which is the tax written down value. All right, just to take it out of the book. Then when we are now computing our balancing charge or balancing allowance, all right, so we will now compare the total allowance that it has. If it's for instance, if it's a balancing charge, for instance, we will now compare that balancing charge to the total allowance that it has enjoyed initially and restrict the balancing charge to that. Do you understand what I'm trying to say? So the
Okay.
additional this do you
Yes,
get what I'm
yes,
trying
sir.
to say? That was what I explained last week. We would
Yes, sir. Yes, sir.
yeah. But if it is balancing allowance, it can be enjoyed like into the future. Do you get what I'm trying to say now?
Okay. Yes, sir.
All right. So 2026, that's the reason why it is a little bit more complicated than calculation of capital allowance. That's why it is not proper to be doing it in between all of this because then you have to be comparing if it is balance. You are not sure if it's balanced charge or balancing allowance. Then when if it's balancing charge, then what you do have to do and all of that. You get what I'm trying to say. So it's better we just finish up with what we are doing first. So 2027, what is this thing? I think you should get easy from here. Then 25 to 39, 26. So here we do not have any cost again because no new asset was introduced. So we have tax written down value. Our tax written down value is always our initial tax written down value. That is our opening tax written down value minus the allowance in the year. And if it's for the second year, if we call that it will be the cost, or if it's the first year of the asset, we call that it will be the cost minus the initial allowance minus the annual allowance. Sorry, let me rephrase what I said. If it is the second year of the asset, pardon me, it will be the cost minus the initial allowance in the first year minus the annual allowance in the first year. But for subsequent years, it will be the opening or the tax written down value in the previous year or the closing tax written down value for the previous year minus the what am I saying? So pardon me, please. The opening tax written down value for the previous year minus the annual allowance for the previous year. Is that clear, please? So for this one now,
Yes.
we do not have any written down tax written down value anymore. For this, we have this minus this. For this, it will be the same thing. Then for this, we have this minus this minus this. Then for this, it will be the same thing. Exactly. Then our initial allowance, our annual allowance for this one. There's no longer initial allowance because there's no longer cost. This one will be zero. Has been taken out. This one will still be this. This one will also still be this. Let me just. This one will also still be this. This one will be this. And this one will also still be this. Since we did not prorate they were for the full years, then we can compute the total for this. That is what, because there's no annual allowance here. This will also be our total allowance. There's no initial allowance here. This will also be our total allowance. So I believe a lot of them are already getting to their final years. So let us just do for 2028, of which the distance will now be, the base period will be 110, 26. So 39, 26. Substituting that value would be, this one will be 0. This will be this minus this, and it will be like that for each of them. Substituting that value. Exactly. Then the annual allowance would be 0 for this. Then for this, it will be this. Ah, no, it cannot be that. So please, someone should help me out here. This is clearly the final year for this one. It means that it has used 4 years already. And if you check this plant and machinery, 2024 to 2028, that is 4 years, right? So it means that this is the final year for this. Am I communicating, please? Because we have prorated in the first year, that is the reason why it's not equal amount up until the final year. So for this annual allowance now, we have to do what? What do we have to do? Elizabeth, are you here? Is Elizabeth back? Elizabeth is not here still. Why? Why is she not here? Love it. Are you following us now? Love it, please unmute yourself and confirm that you're following us. So, love it, what do we have to do? So, love it, what will be our annual allowance for this particular year for plant and machinery one? So I want you, yeah, and I'm deliberately repeating it. The second one should be from the end of the first accounting year end to the end of the second. What? All right. So, all right, please. Sorry about that. Love it, please. What will be the annual allowance for the plant and machinery? What will be the annual allowance for the plant and machinery? Love it.
Is it 1.250?
For plant and machinery, this is what we're talking about. For this plant and machinery here, the first one, not the second one. This plant and machinery here, it has gotten to the final year. So what will be the annual allowance? You call that, what would we say when it gets to the final year? We said we have to retain 10 naira. Don't forget that. You have to retain what,
I
10,
remember that.
10 naira. So what you have to do is just to reduce the
623,740.
eh?
It will be 10 naira. You say we have to retain 10 naira.
You have to retain 10 naira. So what would this now be? What will now be the annual allowance? If you have to retain 10 naira, what would the annual allowance be? And you love it now. Please unmute yourself.
I'm here.
Yeah, you are muting yourself
It will
back.
be 10
Unmute yourself.
naira now. It'll be 10 naira.
The annual allowance will not be 10 naira. The tax down value will be 10 naira. So for you to get the annual allowance for this final year, what you have to do is just to reduce your initial tax down value by 10 naira. And then you have your annual allowance here. Such that when you remove your new annual allowance, the tax down,
311,865.
thank you, 311,865. But don't forget I said something. I said during in your exam, don't just use your head to calculate because there are numbers that 10 naira can complicate a lot of things. Right? Please. Thank you. So for this one now, the annual allowance will still be 360, then it will remain 1 year. Then for this one as well, it will be 1,250 and 625 respectively. All right. So for 2029, let us just do 2029. 2020, although we do not have the adjusted profits for 2029, so we could have as well have just stopped at 2028. Oh, 2029 is very, very important because that's when we will have the final profits. Okay, let's continue. That's 110, 26. This is wrong. This is wrong. So I get. Nobody said anything. I hope you guys are seeing this class. This should be 27 now. That should have been our final year. Because the profit that we have is to 30th of September 2027. So that could have that is as well as our final our what would I call it now? Our final year. Okay. All right. That's our final relevant here. But let me just do this. That's the first question. We have solved the first question now. For the second requirement says that compute the balance. You see, they even like asked you this one separately. It said compute the balancing charge or allowance if any. So for us to be able to compute the balancing charge or allowance, so we say that computation of balancing charge or balancing allowance. Right. Balancing charge or balancing allowance. Okay. For us to be able to do this, what we would do is for us to say we have to bring our parameters out first. Number one, what was the cost of the assets? The cost of the asset was what? The cost of the asset was 12 million 760,000. The tax written down value at the point of sale is what? 860 8670
549.
549. Thank you, Jerry. Nobody's saying anything again. I don't know if you are tired. Then
Disposal
the
value.
sales price or the sales proceeds is how much? 18 million.
Yeah.
Now, you have to compute Was there a gain or a profit? There is a gain, right?
Yeah.
There is a gain on sales. So it means that there is what? If there is a gain, it means that there is a balancing charge, right? So
Yeah.
the balancing charge is meant to be balancing charge is meant to be what? This minus this. That is the sales proceed minus the tax written down value. And it will give us what? It will give us this. Okay. But we have to check what is the total allowance that the asset has enjoyed, because this is balancing charge now. I didn't think it is balancing allowance. We won't have had any issues. We would have keep enjoying it, all right, until we finish enjoying it. But this is the balancing charge, so we have to check the total allowance that the asset has enjoyed so that we can know if we are to restrict that balancing charge or not. So the total allowance that the asset, how do you get the total allowance that the asset has enjoyed? What all you have to do is just to say your the costs of your assets minus the tax written down value. It gives you the total allowance from the inception that the asset have enjoyed. Please, do you understand that? Do you get that, please? So what we what we have done to arrive at this tax written down value is that we have been deducting allowances from these costs. Deducting allowances, then at this point we now said we sold. So if I want to get the total allowances back, all I have to do is just to remove the tax written down value from the cost. Then I get the amount that we have deducted so far, the allowances that we have deducted so far. I don't know if that is clear.
Yes.
So if that is clear, we can clearly see that the balancing charge is higher than the total allowance. So what do we do? Say that the balancing charge, this balancing charge is restricted to the total allowance. So our final balancing charge restricted to total allowance will now be what? Will now be equal to what? This, because we are restricting it. So the difference between what the balancing charge should have been and this and what we are restricting it to will be charged where? Okun Victor, where will it be charged? Oh, where will it be taxed rather? This remaining 5.9 million. Where will it be taxed? He said it will go to what? Capital gains. Capital gains. Capital gains tax. It will be taxed under capital gains tax. So this is our balancing charge. Please, do we all understand it? Do we understand this, please? Any question here? Is there any question here? Is there any question here? Please ask your question. Ask your question. Hello, do we have any question at this point? Any question?
I'm sorry, sir. I didn't get this computation very well.
This is what we are saying. For balance, when you are competing for balancing charge, maybe I should not call this balancing charge. Maybe I should just no. It's balance. So when we are competing for balancing charge, the law says that we must restrict the balancing charge to the total allowance that the asset has enjoyed during the year. All right.
Yes, sir.
Forget about this. This is just like I still know that you can give to the examiner in your exam so that the examiner can this person is sabi wetin they do. So this is what I'm saying. When we are doing balancing charge, when we are computing balancing charge, we have seen that it is a gain that the client, that the taxpayer made from the sale. That is, the sales proceed was more than the tax written down value. It is a balancing charge. What the laws now says is that check the total allowance that the taxpayer has enjoyed upon that asset since the inception or since the acquisition of the assets. Then restrict the balancing charge to this total allowance. All right. That is the reason why after I compute the balancing charge here, all right, I now computed the total allowance that the asset has enjoyed during the year, throughout the year rather. And how did I get that? The total allowance that the asset has enjoyed can be easily calculated by saying that the cost minus the tax written down value. Recall that for us to get tax written down value, all we have to do is to remove the allowance allowances from what? From the cost. So if I want to get the total allowance, all I have to do is just to say that how much allowances have been removed from this cost to arrive at this. All right. And to be able to do that, all I have to do is just to do this minus this, and I have all of the allowances that has been enjoyed during the year as this. So the
So
asset,
that means the allowance include the initial allowance.
of course, they are all allowances. So you can see that initial allowances is part of what we use in calculating our tax return value. For our tax return value in this case here, we said our cost minus initial allowance minus annual allowance. We got the tax return value here. We computed another allowance. We removed this particular allowance again from this tax return value. Then we got this tax return value for the year when it was sold. Then in the year where it was sold, we then removed it entirely from the book. Is that me about to Abiodun?
It was Hosanna.
Oh, Usana. Sorry, I'm not on
Yes.
the screen, so I don't know you guys' voice very well yet. So you understand it very well now, right? So the
Yes, sir.
balancing charge had to be restricted to the total allowance that has been enjoyed during the year. That's why you see that this is the same. Now, and I said, and I did I too know. So the remaining that was not restricted, that is the difference between the normal balancing charge and the balance charge according to the law, which is the restricted amount. The difference between both, well, what does it do? We said that would they just dash the taxpayer? No, they won't just dash the taxpayer. Oh, what they will do is what it will be taxed. That amount will be taxed under what capital gains tax. All right. Is it clear now? But this is the solution. This is exactly what they want you to do. So in your exam, this is where you put your what two striking marks. Bam, bam. I can even do it yourself. You can do it here too now. This is where you do your bam, bam. Can you see that?
Yes,
Right.
sir.
Okay. Number three now. So compute the tax liabilities payable by the company for the relevant years of assessment. All right. So for us to be able to do this, we would follow a similar template that we use for our loss relief. Am I communicating, please? We'll follow a similar template of what we use in our loss relief. What do we do? Number three, computation of the tax liabilities. Okay. So for us to be able to do this, we have a column we call our tax year or our year of assessment. We have another column where we call maybe description or anything we want to call it. And we have two naira signs. First naira sign, second naira sign. What is our first year of Mute yourself? Oh. What's our first year of assessment? 2024. For the 2024 year of assessment, please pay attention to this. We have not done something like this before. Pay attention to this, please. I'm going to make this bold. I'm going to line all of this. Okay. For our 2024 year of assessment, we are going to have what we call what is the accessible profit. They said the result of the company for the first 3 years of assessment, but they give this is more than three now. For the first 3 years of assessment of business were as follows. The results. So that is, these are the accessible profits. So accessible profits. Accessible profit for 2023. Let me put this thing in bracket so that it can be clear what we are talking about. Because this way now it looks like, what is the basis period for this one? Do we actually have to put the basis period? You all understand what we all understand that this for this 2020 now it will be tested when it will be assessed when 2024, right? So we don't have to still put the basis period, right? But please, if you do you think we should put the basis period in brackets? Do you think we have to? I feel like we don't have to. We can even just be checking it. We can even just check it from here. We already have it up here. Nobody is saying anything. Are you still in this class,
No, sir,
please?
no, sir. I'll say something.
Okay. We don't have to put it, Abby. It's clear that this way, right?
Yes.
All right. Thank you. Welcome, Victor. So 3359 060. Okay. That's the simple profit for that particular year. This second naira sign, don't forget, it's always to do your adjustments. So for this one now, after our simple profit, we have to adjust for our capital allowance because that's the only thing they have. We have, I think they give us loss relief now. We will first of all adjust for loss relief before we adjust for capital allowance. But now it's only capital allowance that we have as the adjusting figure. So what I have to do is our capital allowance is there capital allowance brought forward new for the year now because that is the first year, so there's none brought forward for the year. What about for the year? What is the capital allowance for the year for 2024? This is it here. Am I correct? So bring it down here. Am I making sense, please? Am I making sense? Hey,
Yes.
why are people not responding now? Where are the ladies? Am I making sense?
Yes, you are.
People should be responding to me now. Why is that? Is Abiodun Abi? I mean, I've not heard your voice in this class at all. Why?
You
It's only a
said
cool
I
Victor.
to answer too much, so that's why I want to reduce it.
Who said that you answer too much? Me, but Osana. Osana, it's only
I'm
your
here.
question.
I'm here is because I'm in a very in an environment that is so is distracting me a lot.
You cannot be in an environment that is distracting you at this point. Hope you are following.
Honestly, I'm in church. I just have to look for one corner to attend this class.
So sorry. Don't worry. The Lord will reward your efforts.
Amen.
All right. Please just try and pay attention, please. This is where it gets dicey. This is where the application of the principle that, or the law that the of this is where the application of what the law says comes into play. This is our we here now we have our capital allowance brought forward. We said that is zero because this is the first year. Then we have our capital allowance for the year. Then we have the sum of both. That is the one that is brought forward and the one that is for the year. Oh, we don't have to even have that. Sorry. Now, how do we want to? How do we go about this? Okay, this is for the year. We can actually have like a sum of both. Let's have a sum of both so it can make sense. Now, you will then recall that the law says that if it is a trading company, if it is a trading company, it is you must restrict the allowance to two-third of the adjusted profits. Am I correct? If it is a trading company. But if it is a manufacturing company, you can allow everything. But in this case, it is a trading company, so we have to restrict it. This is our adjusted profit or our accessible profit here. We can call it adjusted profit or we can call it accessible profit. All right. So our relief for the year would therefore be restricted to, because this is a trading company, don't forget that, would therefore be restricted to, our relief for the year would therefore be restricted to 2 over 3 of the adjusted what? Adjusted profits. Does that make sense? So it means that when I'm doing my final figure here to now be what? 2 divided by 3 times, this is my adjusted profit here. But this should be in, it should be even be in negative safe. So that it is a relief. Does that make any sense? So the remaining amount that we were not able to enjoy this year because we have to restrict will now be carried forward to the next year. So it means that our capital allowance carried forward. Are you asking any question? You know what? To show that all of these ones are for capital allowance, let's put them here.
Is it just 2/3 or 2/3%, please?
Okay, I'm coming. I'll explain that.
Okay.
It is 2 over 3 or 66 2 over 3%. Either you say 66 to 66 to 30% or you say just 2 over 3. But be for me, I don't like too much while I just say 2 over 3 straight. So if you do 66 2 over 3%, it is the same thing as 2/3. You can try to compute it. So 66 times, or how do we even do that fraction then, Seth? For us to compute, for us to convert it to this thing, we'll say um 66 times
3.
3 plus 2, right?
Yes. Divide by 3.
Plus 2.
Divide by 100.
Divided by, it might be divided by 3, right?
Yes. Then divide by 100.
This is not correct now.
3 times.
Times 3 first. Plus 2. That's 200, right? Divided by that. This it might be 200 divided by 3, right? Am I correct, please? Do you all get what I'm trying to say? Sorry, this is wrong. I
So
don't know.
is it divided not times 100?
Let me do it again. How do I even convert it to decimal myself? That would be 66. That would be 200 divided by 3, right? Someone should compute it for me, please. See,
Yes, yes.
on your calculator, 66 times 3, no, 66 times 3, right? Plus 2,
That's by the where I'm
divided by
confused
3.
is 3 times 100 or divided by 100. That's where it will give
Then
us 2
divided by
over
100
3.
because then divided by 100 because it's in percentage.
Okay.
Then it should give you approximately 2 over 3 now. If
Yes,
you
I
now
got that. I got
so
it.
it's either you say 66 2 over 3% or you say 2 over 3. You get it now, right? Is it clear
Yes.
now? Okay, so I'm not comfortable with this. There's no point doing this. So I brought forward for the year and then our tax written down value. I said our tax written down. I read for the year. So because we could not relieve anything, we will carry the remaining forward to next year. All right, carried forward. After allowance carried forward will now be this minus this. So we are carrying this forward for the year for that particular year.
Sorry, please. Is the formula in negative, or why do we have that 2 points in negative, please?
Which 2 points? This one.
Yes.
The negative is just to show that it is a relief. Do you understand it now?
I didn't understand it.
So I can either say I can just it is the same thing as I can put it as this actually. Same thing as putting it as this. So if I allow this if I allow this during the year 2239 during the year, then I will have this left to carry forward. Is it clear? Is it clear, please? Is it clear now? Is it clear now? Let me know if it's clear so I can move forward. All right. So after we have adjusted for our capital allowance, then we have our total profits. Total profit will be our total profit will be our sale profit minus our relief for the year. Okay, does that make sense to you? So this will be our total profit. Then this is what we're now going to use to compute our tax liability. Don't forget what the question says is to compute tax liabilities for the year, right? So now, please pay attention here. This question did not, I know we have not gotten to CIT where I will be teaching you the rates and all of those things for computing CIT. But some of you might have the idea. From Finance Act 2019, the Finance Act actually broke down the rates into three based on the amount of revenue it makes for each of the years. So it segregated them in a way that if the company makes from 0 million to 25 million, the tax rate will be 0%. If it makes from 25 million to 100 million, the tax rate will be 20%. If it makes from above 100 million now, 100 million and above, the tax rate will be 30%. But please listen to me very well. In a case where we are still going to discuss it very well under CIT when we are discussing the CIT, in a case where the question is silent on the amount of revenue, like in this case, please use 30% as your tax rate. Am I making sense? Please use 30% as your tax rate. So here now, our CIT will be at 30%. It will be what? 30%. Let me just indicate it there. At 30%, which will then be 0.3 times our total profits. Also, the second liability you compute is your tertiary education tax. I know we have not really talked about these things, but please just tertiary education tax is now 3% of what? Of adjusted profit. Tertiary education tax is not 3% of total profit, but of what? Of adjusted profits. So you come here and do 3 divided by 100 times this, and you have 100,771. Please let me know if you have any question at this point. Let me know if you have any question. Where I think you might have question is in this adjustment. But if you were familiar with the way we dealt with loss relief, then it should be it should be very simple for you. The only thing here is that we are restricted for our relief for the year. We have to restrict the total allowance to 2/3 of the adjusted profits, and we will now get the amount that we are going to relieve for the year. That's our RTY here is relief for the year. Please pay attention. Is relief for the year. Okay, is relief for the year. Is that clear?
Yep.
Is that clear? Then our society, we said because they have not given us revenue, was 30% of what of the total profits. But our TET is 3% of what of accessible profits. Please don't forget that. Let's just do one more, and then I'll give you the last one as an assignment. 2025. 2025 was our accessible profits.
23908
23908 Thank you. Yeah, just for our capital allowance like we did before. Allowance here will be the brought forward will be this amount here that was carried forward here. This one that will be our brought forward here. Okay. And our for the year would be the amount that we computed for the year. Sorry, why am I putting it? For the year would be the amount that we computed for the year. Observing. For the year, how much have you computed for 2025? You have to come and check your computation. You computed 2603. 2603. All right. Now, this is where you might have to like do the total first before you now restrict. Okay. Or you can even like still go ahead and restrict because um so let's do for the year, let's restrict it first and see. 2/3. Okay, you already like put it up. You don't have to put it in every time. 2/3 of adjusted profit. What is 2/3 of our adjusted profits? What's 2/3 of our adjusted profits, please? 2/3. Someone should compute it times adjusted profit. What I'm looking at here exactly. So if you look at this now, if you compute 2/3 of our adjusted profits, you will see that it is larger than the amount that we have, which is the summation of the amount that we have is not up to the 2/3 of the adjusted. Unlike in this case where over 3 of the adjusted profits is lower than what we have for the year. Are you getting what I'm trying to say?
Yes, sir.
In this case, the 2/3 of the adjusted profit is way higher than the amounts that we brought forward plus the amount that we have for the year. So therefore, we can actually allow everything. Do you get what I'm trying to say now? We can allow everything. I think here we should have this first before we bring it to the this thing and allow everything. So it means that our leave for the year would be this plus this. What should then be our relief for the year? All right, it will then be our relief for the year. So there won't be anything to carry forward. Our carry forward will now be what? Zero. But then our total profit will then be profit now will now be this minus this. Okay, this minus this, and our CIT would be 30% of that. Will be this times what? 0.3. And our TET, which is our tertiary education, will be what? 30% of our adjusted profits. 0.03 times adjusted profits. Does that make any sense, please? Does it make any sense?
Yes, sir.
Then for 2006, do 2006 as your assignment. Assignments. I've been saying I'm going to share this thing in with you guys. I've not shared it, but I'm going to share it now, even while you're on the call. Don't let me share it now. I will share it immediately after the class because of my confidential stuff. Assignments. I want to write assignments. Compute for 2000 and 2006, 2006 to 2029. By the way, all right. Back there, please. Then let's look at the final question because I'm actually famished. If the company is a pet, if a company now they are not asking us if the company is a pet manufacturing company. Okay, if the company is pet a manufacturing company, will the answer be different from what we have in one above? Will it be different?
No.
Will it be different? You said no. You said no. It will be different because if it's a manufacturing company, it means that we would not be restricting it like this. We would have been allowing everything.
I think that is one above. Oh. That is the
Okay, this you mean this, right? I feel like there's
yes,
yeah,
yes,
I think this is what it means, right? So if this is
yes.
what it means, the answer will still be the same thing. But based on what we discussed, if it's a manufacturing company, then the tax liability will be affected. Do you understand? Because, for instance, in this 2024, the total allowance is more than the profit. It means that the allowance will swallow up the profit because it's a manufacturing company, so we have to allow everything. So if it swallows up the profit, it means that there won't be any CIT. It's only TET that you will have. Do you get what I'm trying to say now? 2025 would have allowed, okay, normally we allow this one. But 2025, because this would have resulted in a negative figure, right? We would have had to like carry the remaining that we're not able to relieve here, carry it forward into 2025, right? And adjust this year as well. So the tax liabilities will have been the total profit will be different, and the tax liabilities will also what be different. All right. But if according to what they said, according to one above, which I believe that is not what the question really means. It is the capital allowance computed will still be the same thing. But the tax liabilities computed in theory will now be what different. Ladies and gentlemen, please permit me to draw the curtain at this point. I will open the door for questions that any questions that you may have. I think this is the end of the class. We have talked about restriction of capital allowance, right? We have talked about treatment of balancing allowance and balancing charge in the last class. Please, I will share the link with they have shared the link with me. I will share it with you now. Please and please go through what we have done again and try to you know practice it. Practice it, please. Try to bring out. I believe it won't be hard for you to bring this out on your notebooks. Okay, please bring it out on your notebooks. Solve it all over again. Deal with the assignments and please send to me. All right. I pray that the Lord will crown all of your efforts. I know it's not so easy to stay up late like this, even me as lecturer. I mean, but we have to do it. Okay. So next week we are going straight into adjusted profits. If you have any question, you can keep it to the next class. I'm so sorry. Some people, you guys send me questions. Okay, Muibat asks questions actually. Let's see Muibat's questions before we go. Some of you ask me questions during the week. I mean, I am quite a busy person. Trust me. At times, I wonder how I make out time for everything I do. But I'm so sorry that I've not been responsive. It's actually our busy season, all right? And I'm so sorry. That's why I'm trying to maximize the time of the class to answer all of your questions. Let me see what Muibat sent to me. Let's see what Muibat sent to me. Is Muibat in the class? Okay. Okay, this is that. Okay, Muibat. So Muibat said, "Good evening, sir. Trust you had a good night. Kindly confirm if the below is clear enough. Additional clarification is needed. Is the acquisition date of PCU that fall in the middle of the month, e.g. Ah,
Yes,
Muibat,
I
are you
got
with
that.
us?
I got that. Yeah, yeah, yeah. It falls in the middle, like 15th of the month. Then like it
Okay.
starts the first of the month.
Okay. So this is a question of judgment. Now, I'm so sorry I did not respond to you. When I saw that there was no time for me, I mean, I'm so sorry. I go out like practically in the morning and come back very late at night.
But
So at times,
I think I got it in this one that we did, that we have fourth.
okay. So the thing is that because it is fault now, it is easier for us to be able to judge that. Let's just assume that it's at the beginning, all right? But in the case of this
Okay.
one, that is directly at the middle of the month, right? You might have to
Mm.
divide that allowance by um ah you might just have to
Then I have there's one of 28th of the month. What about
28th
if
of the
it's
month.
like 28th
20th of
you
the
know?
month is the end of the month already. That one is very clear. But the one that is at the middle of the
So
month,
it's
you can allow for the entire month and just put a note there for the examiner that
okay.
the asset, although the asset was purchased on the 15th of the month, it is assumed, I have assumed or I've computed it as though it was acquired for the full month. You know what would have, what I would what if I wanted to do it in practice? Actually, what we do in practice is that we'll first of all divide everything by the number of days, right? In that year, and then multiply by the number of days that it was actually. So if it is per number of days now, we know that it's 15. If it was acquired in 15 on the 15th, then we know that we're just multiplying by the number of days that it's used in that month. I don't know if you get what I'm trying to say. But because we are computing
I
by
didn't get you again. Please, can you go back because the
let
network?
me let me go back. Let me go back. I said it is actually good for you for professional knowledge acquisition. In practice, what the tax authority would have done is that they would normally, in fact, for depreciation as well, what we would do is we would divide the allowance or the cost by the number of months, by the number of days rather in that year. Then multiply. You know what we do? What we do when we are operating here is to say y divided by 12. It means we are doing per month. But what we will do in practice is we will divide by the number of days and then multiply by the number of days actually. So the number of days in the year is 365, right? If the number of days in the year is 365, we will divide by that 365. Then now multiply it by the number of days the asset actually, or the number of days that is in that basis period actually. I don't know if you get what I'm trying to say. I don't know if you get what I'm trying to say, Muibat. Muibat, please confirm that you get what I'm trying to say. That is just for professional listening. But for the sake of your exam, I feel like this is actually not even necessary again because we have clarified that it is only you are only prorating per the number of months in your basis period, not per um, the date your asset was acquired or the number of months the asset used in the year. Me, but I'm not sure you can still hear me.
She's out of the class.
Uh, okay, please, Abiodun, can you do me a favor? You got the explanation I said, Abi. Is Abiodun also not in the class? Abiodun, why are you not responding now? Okay, Osana, can you hear me?
Yes,
I
sir.
think it's I think it's really
I
Abiodun that
can
has. Do you have a
I
do
can
you
hear
have
you.
do you have me about number?
No.
Okay, don't worry. I know what to do. I will just drop the response on
On the
the
chat
group.
group.
Yeah, I'll
Also.
drop the response on the chat. Is there any other question, please? What I was trying to explain is that based on the clarification that we have made today, that let me even do a voice note now. So Muibat, what I noticed is that you went out of the class. But what I was trying to explain is that in practice, when we want to prorate for something like this, we do per number of days so that we are as accurate as possible instead of doing per number of months. But in this case, for the sake of the exam, we were able to clarify earlier this month, that earlier today rather in this class, that the that
Sorry, I
we are to
believe.
prorate.
Uh, Hello, sir.
Alima,
Can you hear
I'm
me?
going back. I'm already dropping a voice note for you. I've interrupted my voice note again.
Thank you. Because I actually don't
Okay, let me just repeat what I said. Let me just repeat what I said. All
it
right,
might still
again.
go. Okay, so you've been dropping. Okay. Okay.
Let me just repeat what I said now. In fact, I just even left it because you would have seen it in the recording anyways of the video.
Okay.
So what I said was in the case like this, when we are computing like capital allowances like this or depreciation or anything of sort that has to do with proration, what we will do to be able to like move to a point of good precision is that we divide by the number of days and then multiply by number of days that was we divided by the total number of days and multiply by the number of days that was actually used in the period. But that might not be an headache for you anymore. It should not be an headache for you for the sake of your computation in this for this exam. Because don't forget, we are prorating based on the number of months in the basis period, not based on the number of months that the asset was used in the period.
Yeah. Okay.
Okay, do you understand what I'm trying to say? That so it might not really be
Yes. Yes. Yeah. Might not be. Yeah. Might
it
not
might
be.
not be
What
an
about
headache.
if it is the first one?
So if, for instance, if it is not that the asset, if it's not that the company commenced the business, all right, at the middle of the month, like you said, then you might have to like just put a disclaimer. If it is towards the beginning of the period, just use the beginning of the period. If it is towards the middle of the if it's towards the end of the period, just use the end of the period. All right. But if it's not like around the middle,
Mm.
just use your judgment and then disclose, put a note for the examiner.
And put a note. Okay.
Yeah. All right. Is there
Okay,
any
sir.
other question?
Yes, sir.
All right, Osana.
My question is in this computation of
Okay.
asset schedule, the
All right.
percentages, sir.
Allocation schedule. Is it allocation schedule?
Yes,
Okay. Or this
yes.
liabilities.
No, for the asset schedule.
Allocation schedule. This allocation schedule.
Yes, sir.
All right.
The percentage, sir. This plant and machinery one, plant
Okay.
and machinery two, what's the difference, sir? Because I see
Eh,
that their percentages are different.
no, they are not different though. It's 50-25, 50-25.
Okay, that means I missed it.
It's 50-25,
All right,
50-25.
all right, sir.
It's because we separated them like this. Well, we could have done it like an addition, but it is simpler like this for us to separate it like this actually. You get, so that is it. All right. Is there any other question? Let me stop sharing my screen now so I can share the this thing with you on your group page. Let me stop sharing my screen so I
Then
can
there was another question I came across. I wanted to ask before now.
please go ahead.
One of the assignment, the last assignment you dropped for us,
Okay.
I came across a motor vehicle,
Okay.
different two types of motor vehicle. One was supposed to be for commercial purposes, sir, which
Okay.
I wasn't too sure. That's why I'm asking. Is there something like that?
Yes, there's something like that in that table I gave to you. There's something like that. Just check the
Okay.
table.
Okay, I
Check the
think I
table.
also I think I also I think I also saw that. Did I ask that question too? Yeah.
Yeah.
The,
Yes, there's something like
on
that
the
in this.
motor vehicle.
And
Like
that
boss.
particular one was a delivery van.
Yeah.
So yeah, why I
Okay.
wanted to, the question is that, is this supposed to be treated as for the commercial purpose or like the normal motor vehicle?
If it is delivery van is not the more commercial motor vehicle that is separate is the one that is used for maybe transportation.
This one was delivery van.
No, no, it's normal motor vehicle now.
Okay,
It's normal motor vehicle.
okay, all right, sir.
All right. Let me quickly send this thing to you.
So I asked another question.
Okay, please go ahead.
I asked if it will be hello?
Hello, I can hear you. I can hear you. Please
Hello,
go
can you
ahead.
hear me?
I can hear you. Go ahead, please.
Okay. That we will be allowed to abbreviate as in like those motor brand, MV like that, or it will be better to make it in full. Sometimes we're probably the
Your voice is breaking me, but
hello?
hello, I can hear you now. Please come again.
That if
We
we'll be
said
allowed to abbreviate, I mean abbreviation.
it is not safe to abbreviate to. The reason I'm abbreviating
So
is because I'm really using Excel. Even if I'm in class, I try to minimize abbreviation. And it's because I'm using Excel and I want to be able to catch up with you guys and be fast so that it's not be too boring. That's why I abbreviate.
yeah, that's fine.
That's fine, right? Okay.
Okay.
Is there any other question, please? Muibat has vexed. She has stopped asking question. I said Muibat. Oh, Abiodun rather. Abiodun has vexed and stopped asking question because I did not respond to her. Abiodun, sorry. Eh? Sorry. Don't be annoyed. You have what? I cannot really hear you. Your
I said
network
no
is.
issue.
Eh? What did you say?
I said no issue. I'm okay. I'm fine. No issue. Oh.
Okay. That's fine. All right. So you guys should have a blessed weekend, right? Enjoy your weekend and please try to go through everything that we have done. Do your assignments. Pray that the Lord crown your effort in Jesus' name. Thank you so much. Please
Amen.
take care of yourself.
Please don't forget to drop the link, sir.
Oh, okay. I'll drop it now.
They're on the
Bye.
chat group.
Thank you.
All
Thank
right.
you, sir.
Thank you.
Bye bye.
I've
Thank
dropped
you.
the I've dropped the Excel for the solutions. So just
Yes, we'll
check.
send the Excel.
Thank you, sir.
All right. Thank you. And please correct the mistake that we made earlier for those prorations. Thank you.